Unitrader. Continue our deep dive today into the tools and other available resources from Tradingview. So today we're going to look at an indicator, not a tool, and this is by far my favorite and what I believe to be the best indicator available on Tradingview. We're going to get into it pretty quick because there is a lot to learn here. It's a huge indicator, tons of stuff. So I'm going to quickly just pull up the shift pitchfork that I've been talking about in the last couple of videos, and you'll see that our last video we were around here. I believe it was the 6th of October that I released the last video. And look at this, we've come all the way down, and you can see this pitchfork is being very well respected. Now we get to the bottom. How do we know what to do? Is it going to hold? Is it going to break out? Well, there's two ways you can play this out. The way I played it out and the way I generally play this out, we're in a range, right? We are range bound. This is our range, and it's been established since the 19th of September. And now here we are in this really light slope on an upward trend, but definitely not not overly bullish at all here. It's a pretty weak looking slope. So I had a short, and I still have a short that I opened at the top, have taken profits, actually added to it again, and then when we get down here I open a long because I'm hedged. So even if this goes against me and I get stopped out, that's okay because my short will hopefully reclaim what I've lost and I can enjoy the continuation to the downside. Unless it's a fake out, then I just got stopped out for no reason and it comes back up. But that's part of trading, right? When you're trading a range, you always expect to lose one trade. It's going to happen. For anyone looking for confluence, here is the range we are in. Here is our range value area, and actually if you look at the value area low, we have hit it to the dollar. So there's some confluence for you. Also, this is a fib pull, and here's the golden pocket from the absolute low of the move to the absolute high of the move in this range, and here's the golden pocket. So a lot of factors here. There was also a 618 extension inside of this golden pocket, so a very decent strong level and plenty of confluence here. Okay, now if you didn't have all of that and you didn't want it, don't use it, that's fine too. So what we're going to talk about today is vector candles, and in specific traders reality indicator that was written by Infernix. And this is not the indicator. I mean, I have it on the indicator, but I have it stripped down to its bare bones, which is just the vector candles. So if you see here, it's pretty obvious these candles look like regular bars, except they have wacky colors. So we have 4 different types of candles in this chart. We have blue vectors, pink vectors, red vectors, green vectors, and actually we've got more than 4. We've got 6, sorry. Then we have normal green candles, which the body is it's not colored, so it's like a off-white grayish. And then the normal red candles, which are gray inside the body. So these candles are normal. There's nothing special about them. And the vectors are where we get into a little bit of a special dynamic here. So what a vector candle is, it's a candle that shows an extreme level of volume compared to the previous 9 candles, I believe it is, including the vector. It goes back 10. And so we're going to get an idea, and it's also tick based, right? So it's a transaction and volume candle. How many transactions and how much volume? So this gives us great insight. It gives us a lot of information, and it really will help you understand how the liquidity providers or the market makers move price to their advantage, obviously, but can also be used to our advantage. So this doesn't mean we're going to trade like market makers, because market makers have huge pockets. We do not. So they can afford a lot of drawdown. We cannot. Our positions will get stopped out, and they'll just keep, if they're getting margin calls, they just put in more cash, and then they'll eventually turn the market around to recoup those losses. So what happens with these vector candles, there's so much here. If you want to check out Trader's Reality YouTube channel, that's what I recommend. He has like dozens and dozens and dozens of videos on this indicator. And he's the man. So check it out, because you will not regret it. There's a lot to learn with these, so don't get all crazy and just run out and start trading on them. Look into it. But what I can tell you right now is the way that I would have used this. I had this indicator open, I always do, and right now it's very relevant at where we are in this place in time. I'll show you in a quick minute exactly the whole indicator and what's going on. But for now, what we see here is we have these big red vector candles. This pink one, sorry, I'll tell you what the pink is. The pink is basically a red vector candle, except the volume isn't as heavy. It's still heavier compared to the previous, but it's not a red. Okay, and the same is true for the green and the blues. So green vector candles have massive bullish transactions, and the blues have, relatively massive, not as big as the greens. All right, and that is just a very quick synopsis of what these are. So when we are at the top of a move, or a top of a range, a top of a level that you're looking at, and you come into it and you start seeing these big green vector candles, this is the market maker filling orders of retail traders who are getting bullish and think we are going to go. And then obviously the price will turn back around. So that's the key point here, is when you have these huge volume and transaction candles, there's so much retail going long that the liquidity provider of the exchange has to open shorts to fill those longs. That's the way this works, right? Zero-sum game. You can't open a long unless somebody fills it with a short. So he will oblige you, and you'll see that right now, as price is moving up, his short positions that he's opened up in here are all in a loss, right? So firstly, we think that these vector candles, they will always get reclaimed, right? The market will always come back and clean up these vectors. And sometimes it's quick, sometimes it's not. So you can notice here that we came right back, filled in this vector, reclaimed it, and the market maker is allowed to recover his shorts in profit, or at least partially. And then we have this sort of organic move to the top. We come up to the top of our channel and we put in this beautiful M formation here. So I'll just draw that out for you real quick. There's our M, right? It's a bit of a lazy M, but I'm trying to be fast here today, guys, because this could easily be, hours and hours and hours of a video. So after we get this touch, once you get this first pink vector candle, that's a very good indication that indeed we are going down. If it was a red vector candle, it'd be even better. But you'll see we come back up, we reclaim this vector, and then we put in a couple of red vectors. And that's a great sign that we're off to the races to the downside, okay? Now, what happened here, and I will tell you exactly how I would have traded this if I was trading off of vectors. I did not take a long off of the value area low, which was right to the dollar of this wick. I actually took it right from the the bottom parallel line of the pitchfork. And that again was because I was pretty aggressive on this because I was hedged from up top in a short, right? If I wasn't and I was looking to get in on a trade, this, first of all, it's not a very strong move right now, far from it. But if I was looking to get in and I had nothing open, I would have been a lot more conservative. And how I would have played it is this. We have these red vector candles and we're at the bottom of our range. So this is retail shorters, thinking the end of the world is coming, and for some reason opening shorts at the bottom of a range we've been in for over a month, which is insanity. You do not short the bottom of a range until you lose it, confirm that it's lost. It's baffling. But this is amazing information, right? So we're at the bottom of our range and you see this massive volume candle. So right here, what's happening is, retail or dumb money is going short and the liquidity provider / market maker is going long, filling these shorts. And then it kept coming down. We wick through, and this was on pretty decent volume as well, this candle. And then right away we get rejected or we find support and it rips right back up. So this is on the hourly. If we take it down to the 15-minute, which is where I like to enter trades, or below, we get a better look at it here. So what I would have done as soon as this candle closed, I would have opened a long, because this green vector after a red at the bottom of a range really indicates that this is going to turn around. Now, is it guaranteed? No, but it's a good sign, and we have all this confluence down here. So here's the candle close to the top of this move before it came back down. You're looking at a 0.91% move, and that's in just a few hours. So that is not bad. That is actually a great scalp day trade. The problem now becomes that this green vector candle is going to be reclaimed, because now you have a lot of longs opening from the bottom, and this might not be retail. So this might be the market makers pushing price up to the top because they want to reclaim their positions here, their longs that they've opened here. But because it's at the bottom of this channel, that is why you would imagine that it could be the market makers that are going to turn this around and rotate it back to the upside, and maybe all the way up to the top of the channel, okay? But we do want to reclaim this, or they want to. So at some point this will be reclaimed, and usually it's wick and all, but sometimes not. So depending on a couple of things, this is where we bring in another indicator, okay? And let me just get up, which is the PVSRA volume indicator by Grech. All right, and it is also it's pretty much the same thing, except you are going to be actually looking at just a volume bar instead of a candle. So sometimes this wick, let's say this wasn't as big of a candle, including the wick. Pardon me, guys. It would be hard to kind of understand how much more volume is in this candle than the previous red vector candle, right? So we put this on, and again, this is a tick indicator. So this is tick volume, and tick volume is purely transactional, right? So this indicates how many transactions were made in this one 15-minute candle. And if you go over here, you'll see the numbers, right? So right now, that green candle, you're looking at 583 million. Am I reading this right? Sorry, 58,383,360 trades were exchanged. So there was that many transactions, in this one tiny 15-minute candle. And this is Bybit, by the way. So I'm on the Bybit chart. I just stuck on the Bybit chart because of all my charting that I have done on here. So to show you the pitch and the fib and the volume profile. But I would highly recommend you use this on Binance. Use it on a Binance chart because Binance has a lot more volume, so you'll get a lot more delta. You'll just see a lot more. A lot more candles will turn. Okay, so this indicates to us that yeah, these were, you know, decent volume candles in terms of transactions, but this is just huge. So what we're hoping is that retail got in here and started shorting like mad, and the market maker kept opening his longs and filled all of these longs, and now he's going to come back and reclaim all of these longs that he had to fill for the shorts to for retail, right? Hope I'm not confusing you guys. So a decent move. We come back, reclaim most of this vector, and again we have these red vector candles here. But if you look at the actual volume bars, it's not that impressive. They're not overly huge. So not really a strong sign either way at this point in time, unfortunately. But that is how I would have used that on this specific occasion. I'm still in my long position here. I did take profits already, but let's see if this does get some good rotation to the upside. And you'll notice here this huge volume bar here, and this insane, I mean that's just pure wick, this candle. It's insane. But you can see I'm really trying to get back down here and reclaim this, but it hasn't happened yet. So let's see how this plays out. And again, this again not very strong right here. So there seems to be some sort of stopping pressure here from the market maker as we look at this candle. It's a very, very nutty candle. And definitely huge stopping pressure down here. So it's going to be interesting to see how we break out of this little mini range we're in right now. I'm hoping it goes to the upside, but you never know. Wouldn't also mind if we get to the downside and get this over with and take the lows finally, and let's get back to business. So, having said that, let me just close off my pitchfork here because once we open up this indicator, it is very noisy. I'm also going to close this PV SRA. And what I'll do is actually turn this off and I will open it anew. Wait, I don't need two of them. Hold on. Okay, and I'm just going to get this box out of here. I'm not a big fan of too much stuff. So again, sorry, not the boxes, the table. So again, you have to kind of find your groove with this indicator like everything else. The one thing, because there's so many moving averages on here, it's going to tend to shrink the price unless you go up on a much higher time frame. So I like to put it on auto, and this is what it looks like. Pretty intense. And I'm going to go back to the 1 hour chart here so you can see what I'm talking about in terms of the resistance we're facing right now. So this on the 1 hour chart, this is the 50 EMA, and that is what we're up against right now. So in order for us to go up, we've got to get above this 50 EMA, and we have to rip it up. And then we'll find other resistance lines with this indicator. So quickly, I'm just going to go over what's on here, and it's a ton of stuff. We have, first and foremost, all of these EMAs. So I'll open up the settings here just so you can get an idea. We have the 5, we have the 13, the 50, the 200, the 800, and then the 50, there's this EMA cloud here. Okay, so 3, 4, 5. We've got 5 EMAs, and then we have a bunch of other stuff in this as well, and I will quickly talk about this. So sessions are all of these colored boxes, the blue, the green, the yellow mixed in with another green, and the off-whitish, and all these represent is the different market sessions. So what we're looking at here is the green is Sydney, which is the pretty much the you know, kind of the beginning of the market. It'll give us a little bit of flavor what's going on, and then the official open of the day daily candle is at Tokyo Open, which is this green box. Hong Kong is this yellow box, but it kind of gets mashed in here to Tokyo and Sydney, so it turns a little bit of a weird, wacky color. The white box here, which continues, is the London Open, and this little box is the EU Brinks, which is the first hour of trading of London. Then the red box here is the New York session. So you'll notice that there's also a Brinks box here. So we have an EU Brinks, a Europe Brinks, and a US Brinks, and these represent the first hours, the first hour of market open, which is a very tricky place to trade, especially in the US. Not so much in Europe, but definitely the US. They are brutal. They will shake everybody out and then take their real move, right? And we can go down to the 15-minute and check that out. So you see we get a open 2 o'clock, rips it down to the downside, either stops out the longs. Well, it did stop out longs, guaranteed. Anybody who went long here got stopped out. Then it rips back up, gets people thinking long again, comes back down, rips it back down, stops out the longs once again, and then finally makes its move, and now we're kind of going up, right? But that's neither here nor there. Let's forget that. So you've got the sessions, you've got the EMAs, then we have pivots. So you'll notice here, let me just see if I can make this as clear as possible for you. You've got this PP, that is the pivot point. So that's going to be your daily pivot on the 15-minute chart. They use the daily pivots. I have all the other ones turned off. Actually, on standard it comes turned off, but you can turn on your supports and your resistances to go along with your pivot points. And we have this yellow line is your daily open. We have last week's low. We have yesterday's high. And then we have these amazing sort of magical levels, which are your M's. So let me just show you here. Here's M1, M0, your low average daily range, M2, M3, M4, M5, and high average daily range. So these are, like, there's a ton to learn in this, and there's a lot of different ways to use this indicator, okay? So please go check out Trader's Reality, because I'm not going to do it justice, and I won't be able to explain it as well as he does, nor do I use it the same way he does. So I'm old school, you know, I came late to vector candles. I wish I had have had these when I started trading, because I probably would only use this indicator. I could trade just off of this, but I like to prepare my swings, especially my swing trades. I use old school TA. That's the way I do it. But I know a lot of traders who are very successful who use only this. This is all they use. There's nothing really more you need. Especially EMA traders. I mean, in terms of EMA, look at this. Just on the 15-minute chart, the respect that you get out of this is amazing. And the higher time frame you go, the better it is. So personally, I recommend the 1 hour. Figure out your levels on the 1 hour, get your entries down on the 15-minute or lower chart, right? But so this is where we came off of the low of our volume area low, and the bottom parallel of our pitchfork. And here we are now, and you can see we're just running into resistance on the 50 EMA on the 1 hour chart. And again, and again, and again. So we really need to break through this, and I think we will. I mean, I shouldn't say that. I thought we would, but the more we kind of stagnate here, the more I start to think, yeah, all right. Good thing my short is in profit and my stop loss is in profit, and everything will work out fine. But that's exactly where we are right now. So, how long I've been at this already? Almost 20 minutes. So, that is going to be about it for the intro. So again, we really want to use this with the PVSRA volume indicator, because that's going to give us an idea of the actual strength of the move. Because you might have a tiny vector candle that's just kind of bouncing around from one place to the other, but the actual tick volume is huge. And that'll give you an idea that price is being suppressed, especially if we're at the bottom or the top of a range and there's huge volume trying to push one way, and the liquidity provider and market makers are saying, nah, we're not going past this point, so we're just going to have to suppress. Another great thing is the actual candle shapes, right? So you see this, when we came up, we're always expecting to go and retest the 50. That's the way this game works, really. Let me just show you here. So we come up above. I'm going to get rid of this. We break above the 50 EMA, and we're always expecting to come back and retest it. Find support there, see if it holds. We get a nice little move to the upside from there, and then we put in the beautiful M pattern that I talked about. We break down, and once we have this double topping pattern here, this M, once we break down from here, you can always look for shorts as well. And I mean, it is a beautiful thing. You get a lot of respect, and break it down, and then expect for it to come back and test. And if we don't have a bottoming pattern like a W, then expect it to kind of test and then keep on going down. And then sometimes we get weirded out, because this right now, when this first happened here, I was looking looking at this as a bit of a sign of a bottom. So you can see a little bit of a W here. So this is our W, but we have to clear this area here. We really need to break out of here and continue ripping up for this to be an actual W. So nothing has been decided yet. We could go up just as easily as we could go down from this point until we claim this and move up, or conversely, we're going to have to take out this low. So I'm going to leave it there for now in terms of the indicator. Any questions, please leave them in the comments. I'll respond, or I'll make a video regarding the question. But honestly, go and check out Trader's Reality. You'll love it. He's super high energy, and he talks a lot of sense, especially about the way the market moves and psychology. He's all about the way the market moves, which is what you really need to learn when you're starting out. TA is great, but if you don't understand what a trap looks like, then you know you're going to be done. Well, you won't be done, but you will learn the hard way. So right now, what are we looking for? Personally, I would be looking for a potential swing failure pattern of this low. All right, so looking there, And if we lose that, then I will be looking for a potential swing failure pattern either here or here, and see if price will reverse and come back up. Other than that, we do have a beautiful fib level up here. So from the top of this move to the bottom, we do have this golden pocket here, which, you know, has already acted as support even before we put this move in. There is an order block here. This is a very decent level of interest. One thing to be aware of is that this candle right here, this red candle, is a vector candle. So if price comes up, we may actually wick through here and reclaim this whole red candle and then rip it back down. And if we do, you know, if we do come up to the upside, what I would imagine happening is something like this. And again, I say imagine, you know, no idea. What I would imagine something happening is something like this. Come up, reclaim that, wick through, come back down, retest, and then I would imagine we come back here to a new fib level, so probably another golden pocket from this low to this imaginary high we've just put in. And then hopefully price could then make a real test for it and break up to the top of this range that we have been playing in since the 6th. If not, you know, look to the downside. But always be prepared for both scenarios, because that is what this game is. It's a game of probabilities, and there's a huge probability that we go up, but there is the same huge probability that we go down, right? So be ready for both of them. Look for levels up and down. Act accordingly. If you have no clue what you're looking for, especially from below, because below is a little bit trickier right now. There's not the history that we have right above us. There's a lot more levels that are recent. Look for swing failure patterns. And if you don't know what a swing failure pattern is, I put out a video not long ago called The Absolute Best Trade for New Traders, and that is the swing failure pattern. Anyhow, that's going to do it for today, guys. Hope you enjoyed. Like I said, any questions or concerns, leave them in the comments. I'm not a financial advisor. This is not financial advice. And look out for scammers in the comments, because I will not contact you with my WhatsApp info. Thanks so much. Be safe, be well, and see you on the next one.